Hey, Ken, I owe you an apology. I owe you an apology, Ken. Ken, I've been in discussions with FX Street about simply canceling this particular event. By the way, I can tell you this. I can tell you this. One of the things I typically do these webinars is I take a look ahead at, what the future may bring. We've got some CPI data out of China coming out. This is coming out a little less than 2 hours from now, 10 p.m. New York time. That's not a report that moves the market and typically in a big way immediately after the report is released. But that report, that CPI report out of China, has been known in the past to kind of set the tone for at least the Asian and London sessions, if there's a surprise. Now, my best guess is this. The question that I guess I'm thinking in the market's mind, the question in the minds of most or at least many traders and investors regarding China is, we already seen signs that China is slowing. The bigger question is China going to have a sort of a soft landing or a hard landing? That seems to be the question of the moment right now when it comes to the markets as it pertains to China. So in that respect, maybe it's not CPI data from China as much as, some other Chinese numbers like, GDP. And actually, we just had some Chinese trade data out about 24 hours ago. Anyone notice that China's export numbers were a little bit down? Recent China export numbers were a little bit down. So in that context, maybe CPI won't pack quite the punch that it used to, but it's attracted some attention in the past, so something worth watching. Also tomorrow, and by the way, Ken, I'm waiting for you to actually I see one of your latest comments, and I'll address that in a moment. Tomorrow, I will watch Italy. Watch any news flow related to Italy. Let me show you a couple of things here. Either of you know the name of the biggest bank in Italy? And it's a quick question. You don't have time to Google it. Italy's biggest bank. Can anyone name it? Okay, too late. Sorry. UniCredit. UniCredit is Italy's biggest bank. Look at the drop in UniCredit today. 12% drop. Woo! Well, actually, a lot of banks in Europe were hit. In fact, the U.S. banks didn't do so well either. J.P. Morgan earnings came out today, a little more than 12 hours ago. Not so good. Not great. The U.S. bank stocks got hit. Europe got hit as well. But what strikes me is this. UniCredit, Italy's bank, down 12%. We have saw a jump up in Italian bond yields. Italy's 10-year government bond yield. Let me make sure this is recent. I don't know if this is if I updated this or not. I believe it's like 5.82%, but I'm going to check it here. I'm going to refresh this web page of Bloomberg. Yeah, 5.82% roughly. The closing yield on Italy's 10-year government bond. So what's meaningful about that? Well, let's look at the recent history. And again, I see a couple of your comments and questions, and I'll get to those in a moment here. But I want to make sure I got this out of the way. So 5.82%, that puts us at about a level for the Italy 10-year bond. Last seen, get my numbers right here. Last seen early August. First, second week of August was the last time we were there. And you can see that the peaks in early August were just north of 6%. So my point is this. Ever since the trough in about middle to late August, the trough in Italian government bond yields, or the Italian 10-year yield to be specific, we're on our way back up. We're on our way back up. And so if you're wondering what does that mean to the euro, is it positive or negative? Well, the euro has been wishy-washy of late, and we haven't it's actually been more, obviously, to this week. This week it's been more up and down. But that rising yield on the 10-year Italian government bond, that, if anything, is euro negative if it gets too out of hand. And anyone notice that tomorrow, I see your comment about the downgrades. Anyone notice that tomorrow is going to be a confidence vote in Italy for Berlusconi. So, I don't know if Berlusconi gets voted out, then maybe the euro takes a little hit there. Money Magnet, here's my best guess. The downgrades, I haven't checked the latest downgrade. I know there wasn't, you're right, I know there was a downgrade. I think it was from S&P. That might have been a catch-up. I haven't checked, though. I haven't checked to see. Here's what I mean. There's, and Money Magnet, you may be aware of at least part of this. There's 3 different ratings agencies. Actually, I could probably Google this in a moment and find out. There was a link for this somewhere. Who had that? I remember a link. Some source had a link, a web page that showed all the different Eurozone countries and the ratings from each of the 3 major ratings agencies, Fitch, Moody's, and S&P. My point is this, that I'm not sure about this. This is total speculation on my part, but that might be a catch-up cut in Spain's rating by S&P. Catch-up meaning 1 or 2 of the other ratings agencies, Moody's and Fitch, may have already made a cut. I'm honestly not sure. Now, even if it isn't a catch-up, even if S&P is leading the charge there and making a deeper cut to Spain's rating than the other, than either one or the other 2 ratings agencies are, I would guess this, that we're still seeing a situation this week more than not where the Bulls seem to be winning a little more than the Bears, especially a lot more than the Bears over this week, because there seemed to be some hope. I would think a little bit misplaced hope, but nevertheless hope that maybe the Europeans are going to get their act together and come up with some sort of comprehensive plan. I'm still maybe you are too. I'm still very pessimistic about the Eurozone, 17 Eurozone countries as a whole having the political will and coming together with to agree on a common plan that's not only big enough, like almost like a bazooka sort of thing, but comprehensive and lasting enough to make a difference to please the market. I'm sure you have heard some of the estimates about how big the EFSF needs to be, or some people. I mean, the estimates vary, but I've seen estimates, 3 trillion euros, 4 trillion euros, and we've just finished or just approved from Slovakia, just approved the EFSF to get bumping up to from the original number, whatever that was, to 440 billion euros. Yeah, and I agree. Money Magnet, you're not no argument here. It seems like a lot of false hope, but I will say this, Money Magnet, whether you like it or not, and I'm not picking on you, but I mean I feel the same way whether I like it or not. We've seen this time and time again over the past several months. Really, anytime, even if it's a little baby step, even if it sounds something that sounds positive or just even slightly positive, some an expression of faith that like from Germany that we'll back the euro. Even the littlest baby step by Eurozone officials seems to be greeted by euro recovery in the euro, or maybe more. It's more of a short squeeze. I mean, that's just the way the market's been behaving. Again, is it logical? No, but that's maybe sometimes is it logical? No, but that's what the market is like to do. I gotta tell you, if it's when you compare, even though I think it's a tall order to expect Europe to be able to pull off what many think they need to pull off. If you compare Europe to what's happening or really not happening in the U.S., I'm telling you, maybe I'm biased and I don't want to get too political about this, but I haven't been terribly impressed with what U.S. officials have done or really been able to accomplish. At least Europe's showing some progress, but I think we're expecting too many people are expecting too much out of Europe. Yeah, Money Magnet. And you think that? By the way, I need to back up. But I'm getting into this conversation, but I feel like I've overlooked Ken a little bit. So Ken, I want to catch up on some of your questions. And Money Magnet, I'll get back to this conversation in a moment here. Currency war with the USA. Yes, Ken. That's you know what? You can argue, Ken. We've been in a currency war for some time. Really, ever since as this global financial crisis has progressed, and there's been some signs of recovery, and all these central banks have been lowering rates, especially after the Lehman Brothers bankruptcy, and some governments have been putting forth fiscal stimulus and such. as all this has unfolded, and especially in the Western economies, as demand has faltered a bit, well, actually more than a bit in some cases, what especially the exporting nations want to see or want to do is have a weak currency. And for that matter, look at the U.S. I don't know if you remember, but U.S. President Obama stated, what was this, like a year or two ago? Maybe it was soon after he took office, and I should recall the exact timing, but I recall Obama saying something about a goal for doubling. By the way, notice the euro reached that 37.50 to 65 zone and flipped. That zone is having an effect on the euro again. It did earlier this week. I recall Obama, in fact, as I'm speaking, President Obama's wife's on CNBC right now. I recall Obama stating a goal of doubling U.S. exports in 5 years. And this was he said this 1 or 2 years ago. So, we're not quite halfway towards that 5-year, period of time passing. But, my point is this. Even the U.S. wants to sort of export its way out of this mess and export its way to some sort of recovery. But so that's the currency war part of this. That everybody wants weak currency, so everyone can reap benefits from weak currency that that a country's exporters can enjoy when the country's currency is weak. But not everyone can win that game. I mean, it's a zero-sum game. There's going to be some winners, going to be some losers. And when you have the biggest economy in the world, whose central bank is, as some like to put it, printing money and pursuing extremely accommodative policy, zero interest rate policy or ZIRP, QE1, QE2 are behind us now, Operation Twist, and as Money Magnet has already said, the prospect of QE3 sometime down the road. That all of that is a dollar negative, and you got to wonder that if the Fed isn't pursuing this merely to just keep the dollar weak to help with the U.S. export effort. So yeah, currency war. It's exactly. Welcome to the currency war. You know what? As a trader, this is pretty good stuff. This is pretty good stuff because it's an ongoing battle, and when you have central banks and governments battling like this to help shore up their economies and pursue, in many cases, some very unique, innovative policies. Maybe innovative isn't the right word in all cases, but anyway, some very new policy tools have been introduced and pursued by multiple central banks. When you have stuff like this going on, and different economies and different conditions, different states of recovery or lack thereof, it means money's going to move and means currency's going to move, and that's good stuff. That's good stuff. Let's put it this way: the strength or weakness in currencies matters a lot less when things are going fine, when everything's hunky dory and the globe is growing and the big economies are growing, and that's not what we have right now. That's not what we have. So you have governments and central banks pursuing policies that may not be in the best long-term interests of the country, but you also have to consider that we also have in place that not only the political leaders but even some central banks, these people have constituents, and if they don't keep the constituents happy in the near term, then they will lose their job. And so I'm not defending the politicians at all. It's actually a shame that we have systems in so many countries where politicians are catering to the short-term desires of their constituents and not doing what's best for the longer-term health of their respective countries. But that's we can all complain about what should be and just recognize what is and trade it accordingly. So Ken, I don't know if I answered your question about a currency war, but it's just another way to put it is this. I mean, it's like a race to the bottom. Everyone wants a weak currency, even though the U.S. even though the Treasury Department specifically may tout a strong dollar policy. No, the reality is, I mean, any country that's seeking to help shore up its economy via exports wants a weaker currency, because when your currency is weak, And when your customers' currencies are stronger, your customers can afford to buy more from you. Your products and services are cheaper on the global marketplace when your currency is weaker. But again, it goes back to the deal of there's not everyone there can export their way out of a mess. There's got to be some balance there, and there's got to be some really winners or losers. And what should happen is those who run trade surpluses should pick up on the consumption side, and so those who run trade deficits should be able to benefit from that. But that's it's easier said than done. So can you ask about swing trading, day trading, and scalping? You know what? That's a good question. But even if I'd seen the question and started addressing it at the top of the hour when I started this, it's a fairly lengthy topic. It's a fairly lengthy topic. I guess I can start with this. And Ken, I don't know if you're looking for a basic definition of what they each mean. Let me put it this way. In terms of technical analysis, we teach at boot camp the application of the same kinds of concepts to technical analysis of, say, a 5-minute chart as we do to technical analysis of a daily chart or a longer-term chart. The same kind of concepts apply in identification of support and resistance, defining bias, using moving averages, Fibonacci studies, indicators like or oscillators like stochastics and MACD. I mean, some of the same things apply. I would just add this. This is my personal opinion. Not every trading trainer or currency coach, whatever, agrees completely with me. But my perspective is this, and maybe either you or Money Magnet can relate at least a little bit to this. When it comes to the longer term charts, in my view, when it comes to longer term charts, you need to incorporate more fundamental analysis. Knowledge of what central banks are doing or likely to do, what governments are doing or likely to do, how investor money is flowing into and out of countries. That's just the basic stuff that usually moves currencies. That you need to. I feel you need to pay a lot more attention to so-called fundamental analysis if you're dealing with longer-term charts. If you're doing swing type trades. Now, scalp type trades. It's my opinion that I don't know that you should be entirely oblivious to fundamental analysis, or especially to news. But I think that the extremely competent technical trader, I would argue a world-class technical trader, you can almost ignore fundamental analysis. Really, I mean, I still think even the scalper, the short-term scalper who trades based on a real short-term chart, 3-minute, 5-minute charts, 15-minute charts, even like a 1-minute chart at times. The scalper still ought to be aware, especially these days, given how markets seem to be notably influenced by news flow these days, more so than they have been for a long time. I think these days you need to be at least aware of what's happening on the fundamental scene. I mean, if there's some major media in Europe from which can emerge commentary or plans that could shake up the euro, for example, or if there's a major U.S. report that historically has moved the market, and you're looking for a scalp trade, and you're taking a scalp trade minutes before the news comes out, maybe not a good idea. Oh, so Ken, you're looking for my favorite methodology. Well, you know what? I'm somewhat versatile. I do a little bit of all that. I tend to try to take what the market gives me. I would say me personally, now this shouldn't necessarily be you, but me personally, I'm a proficient scalper, but not a great scalper. I can scalp my way through a trading day if I have to, if that's all the market's going to give. But I'm telling you, Ken, I'm just beat. I am worn out after a day of scalping. I just don't have the energy or the desire to do much else. I'm just flat dogged out after a day of scalping. I mean, you just constantly buy, sell, buy, sell, buy, sell, buy, sell. I know traders who actually enjoy it and do it very well. It's just not me. I mean, I'll do it if I have to, but on the days that I do it and do it a lot of scalping, I'm just worn out. So it's not something I prefer, but kind of like I'll do it if I have to sort of thing. My recommendation to you, Ken, is this. I believe each wannabe trader should find the kind of style that best suits him or her. You may be by nature a great scalper, or maybe you're by nature maybe more swing type trades are more to your liking. Take longer term trades, especially if you have some interest in or just simply can relate well to, the world of fundamental analysis. But I guess my recommendation is you're going to have to find, I think, through experimentation over time in different market conditions, and even on different days let's face it, we all have different moves on different days. Sometimes we're sharper than others. So I think each person needs to take the time to simply experiment with that. Do scalp trades for a week. Do spot trades for a week. Do swing trades for preferably a longer period of time, since there's not as many swing trades that presents themselves as they would be spot or scalp trades. My point is, you need to find what best suits you, how you perform best. I mean, the evidence there would be, number one, look at your trading records. Do you do well on scalp trades versus spot trades, or are you more of a swing trader versus a scalp trader? Or maybe your lifestyle or the other demands in your life dictate that you be more of a swing trader versus scalp trader. Or maybe based on the time of day that you can trade and the session and the volatility on the session during the session that you are trading or you can trade, maybe the conditions during that session dictate what kind of trader you should be. You see what I mean, Ken? So it may not be the answer you're looking for, but it's really what I what I suggest to everyone. And just the way I like to put it is, you need to find your voice as a trader. I mean, let's put it this way: we have another currency coach, namely our London session coach, Christian Stevens. He is he's taken on some carry trades from time to time. I mean, these are some long-term trades, which by the way aren't necessarily in vogue right now unless you're looking for a U.S. dollar carry trade. But I don't know. Who knows? We may be establishing some bottoms on the ends, but I'm cautious about that. So so Christian Stevens, London session coach. I consider him an outstanding scalp trader. A very, very good one. Maybe world class scalp trader. Many others have tried to mimic him, and it just doesn't work for me. By the way, the Euro USD at a interesting level right here based on our recent price action over the past couple hours. So my point is this: you can maybe you watch some video reviews from the likes of me or one of the other bootcamp coaches, or you follow some other trader doing some other webinars here at FX Street, and you tend to like their style, or you like the success they seem to have achieved, and you want to mimic that. I encourage you to try that, to pursue that, but you may find that as much as you try, it just the trading style or the apparent trading style of a certain other trader or coach or whatever just may not suit you. And there's nothing wrong with that. You should find the kind of style the kind of approach that best suits you. You may find over time that, in fact, I don't recommend this. Pick what you like. Pick up tidbits from one trader, from another trader, from one trainer. One seminar, webinar host here, or a currency coach, or tips you pick up from videos like the video reviews that I do from time to time, for example. Pick up all these things, try the different combination of things, and hopefully you will find a style of trading, a combination of indicators, and maybe a set of currency pairs that all wrapped into one that defines you, that defines your trading. And why that's important is this: when you're comfortable with a combination of trading style, the indicators you use on your charts, the pairs you trade, the time of day you trade, all that stuff. When you're more comfortable with all that stuff, with your toolbox as a trader, you are more likely to be confident about your trade plans. You're more likely then to execute your trade plans with confidence. And confidence is so important in this endeavor, in trading. Confidence is so important. I mean, you may try your best and maybe actually sort of pretend to be able to do it, to trade like someone else. But if it doesn't feel right to you, if you're always stressed about trading a certain way, in the long run, it's not going to work. it's not going to work. Yeah, you said it takes a lot of energy to scalp, and frankly I feel the same way. I totally do, totally do. So Money Magnet, I haven't forgotten about you. I don't know if there's anything else on your mind. I think you've already heard that if you attended one of my webinars earlier this week, that I'm watching a couple of dates in particular. I'm not the only one watching them, but there's been some chatter about the market. First of all, it sounds like the European leaders are meeting. I believe the date for a summit is October 23rd. October 23rd for a European summit. That sounds like a summit at which they'll hopefully, fingers crossed for the Europeans, discuss the plan that they're going to then present at the G20 meeting in Cannes, France on, I believe, November 3rd. So, I mean, my thinking is this: I expect the euro may fluctuate a little bit, like it dropped a little bit earlier in response to the S&P downgrade and such. But I think things like this, the downgrades by ratings agencies. By the way, those downgrades are not so much leading indicators, but lagging indicators. The market will respond to those from time to time. But, right now what the market is, as I sense what the market is looking ahead to, is the market already expects that there's some countries in the Eurozone that are going to be downgraded eventually even further. Now the market's looking ahead more to, what can or will the European leaders do in terms of, the EFSF fund, the bank recapitalization of the Eurozone banks. So by the way, did you notice that there's some Eurozone banks talking about selling assets? There's seems to be some opposition to recapitalization because there are concerns about dilution of shares there and such. Though some banks are, I've heard some chatter about banks selling assets to raise capital. Yeah, I agree. Well, you know what? Not just the Europeans, but even some others have proven that to be true, right? Easy to put up a plan, but put it in the action is another. Well, just look at the exercise they've gone through with this EFSF, with the EFSF ratifications that were agreed to in Brussels on July 21st. We're just now. Do the math on how long it's been. August, September, October. We're talking not quite, but nearly 3 months. 3 months from the day where they said, let's do this with the EFSF, let's change these things, to approval by all 17 Eurozone countries. What a cumbersome process, right? What a cumbersome process. And most market players just generally agree that the EFSF now in its new form is not going to be enough. And hence why the European leaders are talking about, okay, what's plan B? What's the next grand plan? Because the grand plan they thought they had decided upon on July 21st, even that isn't enough. Yeah, it does. It does. And well, I know many, or at least not many, but at least a few banking industry analysts that I follow pretty closely, that whose work I've at least come to respect. And I don't agree with everyone all the time, but I like listening to those who seem to do their homework. And at least some of the ones I listen to that are U.S. based that know a few things about the European banks. They're the ones saying that a lot of European banks are essentially insolvent. And if you look at the numbers, I'm not a long time banking analyst, but if you look at some analyses of the numbers for the European banks, it's hard to disagree with them. Oh yeah, totally, Ken. The stress test, totally a joke. Credit to the Americans for the stress test they did. What was this, in 2009? Not the Americans have done everything right. They have definitely not done everything right, but that was arguably an effective stress test. At least as far as stress tests go. I don't know if they did enough. They made it an optimum stress test, but it was enough. But yeah, the European stress. Ken, you said the stress tests were a joke. Was it Dexia? what's the Belgium, the French Belgian bank, Dexia. I believe I heard that Dexia passed the stress test with flying colors, and look what just happened to them. If you don't know what I'm talking about, look up, Google DEXIA. Well, and I guess European leaders are, I'm guessing I got to think behind closed doors that a Greek bankruptcy is already agreed to be inevitable. They're just trying to, I'm guessing that what they're trying to do is put some plan or plans in place, or at least maybe cajole the European banks to do the right things, to simply prepare for the inevitable, which is a Greek bankruptcy. Hey, True Bands. So this has been pretty cool, and again, my apologies for the late start, and for I was actually in conversation with the folks at Epic Street to just say let's just cancel this, but and I say cancel because I'll admit I've done some webinars in the past where there's been like 2, 3 or 4 people, and hardly any of them say a word, and I respect that's okay. Not everyone that attends a webinar has to converse, but I've been in some webinars in the past where there have been like 3 or 4 people and none of them say anything, and so I'm blabbing for 45 minutes, and it's just I don't want to sound cocky out because I'm humble, and I try to be humble anyway, but it's not the best use of my time. I compare that to the webinars I do every day at FX Boot Camp, and we have 60, 70, 80, 90 people in those, depending on the day, depending on the time of year, and I've got work that I've got to do to prepare for those events for a much larger crowd. So I got to pick and choose where I spend my time, but by all means, if we have this has been helpful for me, because if I have even nearly a handful of people that are making comments, posting questions, and are conversive here, this has been an effective use of my time, and it's not just about me, but I hope it's been beneficial to you too. How much bad debt can the ECB hold in the balance sheet? Well, money magnet, when it comes to ECB, I mean, they really could, if the political will was there, they really could go sort of nuclear and print money. I mean, in theory, they could do pretty much what the Fed has done, and just that would be the solution to the European banks. Buy up some bonds, help boost the bank's balance sheets with some euros, but that's just, actually there was a great piece, who wrote this? I think it was Art Cashin. Art Cashin wrote a piece posted on Zero Hedge blog yesterday, or it was today. Piece about the and maybe some of you are already familiar with this, about the history of especially of Germany. And let's face it, I mean, the Germans are spooked, and you can't really necessarily blame them, but the Germans are spooked about the prospect of future inflation. Germany went through a nasty bout of hyperinflation back in the 1920s, and because I think I've been through the story before here, hyperinflation in the 1920s, and we had the stock market crash in late 29, and the U.S. went through a mess there in the early 30s, and Germany went through some troubles as well. A certain political party came into power in the 1930s, and the rest is, as they say, history. So I mean, the Germans are ultra sensitive to the idea of doing anything which could eventually spark a great deal of inflation. So arguably the tool, the means is there in the ECB to be the solution for the Eurozone, but the political will is not there. And think about Germany. At the end of the day, what's Germany going to do? Germany's only going to do as much as they can until their own credit rating, their own sovereign rating, their own economic situation is compromised too much. I mean, Germany's stuck between yeah, you want to help the eurozone because what is it? Is it 40% of German exports go to the other eurozone countries? I may be wrong about that, but something like that. I mean, Germany relies on 40% of its exports going to other eurozone countries. So I mean, Germany doesn't. It will have a notable effect on Germany if many of the peripheral countries go through some tough economic times for a long time. But on the other hand, is it worth the price that they may have to pay to hold up those countries? Well, yeah, you mentioned the EFSF in Greece. You could argue the EFSF has enough money for Greece and maybe pepper in Ireland and at most a little Portugal. But yeah, forget it when it comes to either Spain or Italy, let alone both. Because how much outstanding Greek sovereign debt is there? I mean, the whole Greek government debt markets, 360 billion euros rings a bell. I would agree with that. So, when it comes, here's what it comes. If you want to boil it down in the simple terms, and this is something I don't do enough. I tend to take the simple and make it complex. But if you want to boil it down in simple terms, Kyle Bass. Kyle Bass is one of the many guys that I follow, and he's a guy that I sense does his research, and he also explains things I think very well. Very well. He had a recent interview on CNBC that aired sometime last week, and I've actually referred to it on my Twitter page. And how did he put it? It was something about here's the simple question. The simple question when it comes to the future of the euro, or you have the eurozone, especially the euro, is Germany all in or not? That's the key question. Is Germany all in? If not, then it's either bye euro or the euro takes on a dramatically different form. Which which actually may not be a euro positive per se. Or sorry, it may not be a euro negative per se. It really does depend on how this all transpires. I've heard some talk about, and maybe it's all purely speculation that could be years away, who knows, but it's safe to say that you can really divide Europe into north and south. The strong northern core, think Germany, think France and Netherlands, and who else is in there? Is Austria part of that stronger bunch? And then the rest of the southern countries are having a little more difficulty. I'm saying that tongue in cheek, a lot more difficulty. So there's been talking about like the stronger core splitting off and doing their own thing, either taking the euro with them or kind of creating a second euro or something like that. I don't know. I'll let the I don't know, the economists or the historians figure that out. Well, I've definitely run past my time. And I'll wait a moment to see if I've missed any other questions or comments, or please repost a question or comment if you have one. But, of course, you probably know by now that I'm not known for short answers or short comments in response to posted questions or comments. But, I'll do my best here. A little surge up on dollar yen here. Dollar yen not far from 77. 77 has held before as resistance. Oh, Money Magnet, no reason to apologize. This has been definitely been worth my time. Listen, if anything, I should apologize to all of you, and especially to Epic Street. We got a late start here, and I was actually hemming and hawing. Do I do this? Do I actually go through this webinar or not? But no, it's been this is, to me, this is time well spent. So, Ken, I got a question for you. Tomorrow, do we buy or do we sell the euro? Buy or sell? That was a joke, by the way. You don't have to answer that. Yeah, I won't disagree with your assessment of righties and wins. I haven't updated this chart as much. We had a almost a trend line break there, but I just feel like we're going to play. It's actually for the technicians. This is going to be a more of a technician's play, I think, in the coming days. We might get a curveball out of Italy tomorrow. I think I mentioned the recent spike in Italian government bond yields, the big sell-off today in Italy's biggest bank, and of course there's the confidence vote for Berlusconi tomorrow. So maybe some news out of Italy that shakes up the euro tomorrow. But barring that, I just suspect we just a lot of technical trading for the next week or so before this European Union Leaders Summit. The only other thing I guess that could shape sentiment in any given day is going to be U.S. earnings. U.S. earnings could be U.S. corporate earnings. That is, that could be interesting. Only that U.S. corporate earnings, especially the outlooks from major U.S. companies, could give investors and traders a look into what will the next quarter, 2-3 quarters look like? What could it look like for the U.S. economy? Definitely keep your eye, and we're somewhat 25, 40, 45 pips above it. Definitely prospective support, at least temporarily, around the 36, 80 to 90 area. That defined along earlier today. So you're talking about 137. I won't deny that 137 could hold. It could, but just based on price action alone, I can move this horizontal blue line a little bit. Maybe call it 85 instead of 80. I mean, as I see it, that's we may not get there, but if we do get there, that looks like the real deal. I should really move this trend line. Oh, and I inadvertently deleted the horizontal blue line as well. Good move, Curt. Often forget to unselect lines before I delete other lines. There we go. So yeah, 80-ish. Oh, by the way, I'll end it with this note. This is covered in my New York session video review, which will be posted on on the FX Bootcamp's YouTube page, also posted on the Forex Street blog. But I want to give you a look at this. In fact, I may come into play later here. See if I can spot on this chart. I have my charts on my other platforms, but I haven't identified on this chart on this platform yet. Yeah. You see that one? Everyone see the case for that green trend line I just had? This is a cable 4-hour chart. This is the kind of trend line I think a lot of traders might overlook or simply just have trouble spotting. It's one of those trend lines that, some days it's resistance, other days it's support, and it goes back and forth, sometimes resistance, sometimes support. But trend lines like that can contribute to some great trade plans. Yeah, that established or helped define, anyway, the low for today's New York morning session. You have that 50% fib of yesterday's rally, and the 56.65 area has been important in the past. And my gosh, you could probably make a case for another trend line there as well. Money Magnet, I highly, highly encourage you to look for such things. Again, it's not foolproof. They don't always behave as what you might think. I mean, there's some days the market seemingly just totally ignores such trend lines. But as I'd like to say, trend lines do, especially the longer-term trend lines that are defined by multiple touches. Those trend lines do have memory. They do have memory, meaning you can have some days or weeks when the market is seemingly oblivious to the trend line, and then, weeks later we revisit what the extension of that previous trend line, and boom, it's all of a sudden the market, respects it. And let's just put it this way: I've been exposed to an arguably negligible sample of all the forex traders out there. In fact, there's no argument about it. There's definitely a negligible sample. But I've seen enough charts from enough foreign exchange traders. I mean, I'm talking about arguably seasoned foreign exchange traders to know that there's plenty of traders out there that look at identify such trend lines and use them to cast their to help define their trade plans. So yeah, I highly encourage you to look for such trend lines. Now you can get too crazy about this. You can get too out of hand with it. It's one of my own faults as a trader. If you've ever gotten the impression that I'm trying to convey that I'm a perfect trader, I'm not. And one of the things that I've always done, as not only as a trader but as simply a professional in my line of work as a statistician in the past, as an engineer in the past, a quant, I've tended in the past, if anything, to overcomplicate things. I can't remember countless times I would run studies or statistical experiments as a statistician and just simply involve too many factors and make the analysis too complex and just really get out of hand with it. So there needs to be an element of, and it's something I constantly remind myself of. In fact, all my monitors on my that I'm looking at right now have one. That have some other things on it, but each monitor has one piece of paper that says, keep it simple. Keep it simple. It's my constant reminder to myself to simplify, to not to get overly complex. But, when you see on certain lines like the green one I've just drawn on this cable chart, you got to notice stuff like that. I think you got to notice stuff like that. And you know what? It's sometimes in today's case, you have traders, I'm sure, who just said, hey, they looked at the like an hourly chart, for example, and just say, hey, it's a 50% fib of yesterday's move up. Pure and simple, that was the reason for the trade. And there's plenty of traders who would trade just based on that. Other traders who would say, and rightfully so, that I think it's the 56.65 level has been important in the past. And let me see if I can draw a line at 56.65, and you'll know what I mean. And again, I'll cover all this in the video. A little harder to see on this chart. I think it's a 1 hour chart when I spotted this. You can see a couple of cases on this 1 hour chart. I really got zoomed out. So anyway, seen some evidence here. Some evidence of the 56.65 level. The 1.5665 level has been important. So I'm sure some traders say, hey, it's just, that's been resistance before. It was support today. That was all there was behind the cable trade plan. Well, I don't know about you, but I like trade plans. Now, you don't always get this, but I particularly like trade plans where you have a convergence, a combination, an overlap of prospective sources, in this case of support, or in the case of a high-quality short, multiple prospective sources of resistance. I always like to look for overlaps. And I definitely went over my time, but I thought I'd bring it up because I still see my share of even some fairly experienced traders are still either just don't think of looking for trend lines, or they admit they have trouble identifying them. It's something you need to focus consciously on, I think. And believe me, it's not like I wasn't born with the gift of identifying trend lines. I had to see actually a few charts of other traders myself, especially before I was a currency coach. I had to see a few charts from other traders where they had trend lines like the green one I've shown here, identifying the charts, and I had to see a few of those and then start consciously looking myself and kind of getting the practice. And it's kind of like turning over rocks and expecting to find, I don't know, a nugget of gold. I mean, sometimes you turn over a rock, you don't find anything. Sometimes I'll draw a trend line and it's just like a trend line to nowhere. But over time, if you draw enough of them, if you identify enough of them, it gets a little easier. It gets a little easier to spot these things. Anyway, folks, thanks for joining me. Hope a few of my comments helped, and we'll do this again, hopefully, fingers crossed, with my gratitude to FX Street for allowing me to do these webinars. My next webinar, I believe, hopefully, is scheduled for 1 p.m. New York time next Monday. What's that? Just after London close. Have a great evening, night, morning, wherever you are. Enjoy. Cheers.